as we were saying, it is the banking space which is in focus. Let's get in Vaibhav Agarwal, VP Banking at Angel Broking, who now joins in on the show. Um, Vaibhav, just wanted to get in a view as to how you see the banking sector shaping up, and sectorally, what's the outlook with macro revival now getting slower than expected? Do you think that the banking sector is in for more pain?
Well, yeah, in the near term, so long as, the external concerns are also prevailing, because of which we are seeing some bit of sell-off in the markets, banking being high beta and, quite well owned by the foreign investors, could see some near-term pressures, so that is one thing. But on the fundamental side, I think it's sort of evenly balanced at this point. There are positives in terms of, inflation currently being quite low, and private banks available at reasonable valuations as well. But as you pointed out, in terms of the growth, the revival has not yet kicked in, and it is showing in credit growth as well, which is sub 10% and likely to persist at those levels, possibly up to the end of this year as well. So it is a little evenly balanced, and in the near term, things are not looking like they'll pick up immediately for the banking sector. But if one is to play a slightly medium term view, I think private banks at this, at these kind of valuations could still be good investments.
So Vaibhav, give us names and your target prices and your top 3 ideas within the banking pack.
So in the banking pack, we continue to prefer the private sector banks. For PSU banks, although the slippage rates are tapering to an extent, but overall stressed additions are still happening, at higher levels than what their current profitability and balance sheet can absorb. And so overall, that space remains neutral for us. On the private banks, we continue to like almost most of the private sector banks, especially with the correction that has been happening. We in terms of the top picks, it's Axis Bank, ICICI, and Yes Bank for us. But at this point, even an HDFC Bank, with the slight underperformance, is a decent buy for us, at this point. So it's clearly overweight private sector banks for us, and more or less neutral for the PSU banks.
What's the view, Vaibhav, when it comes to the RBI? Because it seems that expectations are rife that a 25 bips policy cut is expected in, rate cut rather is expected in the upcoming policy. How do you see the banking sector reacting to the rate cuts, or even perhaps if we just get a status quo?
There is, I think, a decent probability of a rate cut, considering that overall, inflation levels are extremely low. Even globally, there is a deflationary environment, and India is benefiting from that. So clearly that benefit is there. The only concern would be that monsoon, towards the end has disappointed, and if that results in vegetable and fruit inflation, going into November, December, so that would be the one factor on RBI's mind. Other than that, everything clearly justifies a rate cut. And I think in the overall balance of things, we do believe there is headroom for 25 basis points in this policy. And then maybe the RBI would wait and watch what happens in November, December for the fruit and vegetable inflation. But yeah, we would expect a 25 basis points rate cut, which would be a positive for the banking sector.
There were some media reports indicating that the government is looking into a differential operational structure for IDBI Bank. Any view on IDBI? Because it's one of the banks with high exposure to stressed assets as well.
Right. So, on a fundamental basis, IDBI is a neutral for us. Clearly, with the kind of, very corporate focused, very large corporate focused, loan book that they have, they've continued to see, some amount of asset quality problems. So, fundamentally, we were neutral on it. Again, these, possible changes, I mean, till they are concretized, it would be a bit of a speculative call to just, get into into IDBI Bank. But yeah, I mean, if there can be a transition to the Axis Bank kind of structure, I mean, in the long run, we do believe that would be a major positive for the bank. But I think at this point, it would be speculative to go, go and buy the stock. I think more clarity is required. And pending that, on the current fundamentals, it is a neutral for us.
Do you think you would prefer some of the private banking names that have a high portion of corporate book or retail book?
So on the private bank side, like I mentioned, we even like an HDFC Bank, which is retail focused, and valuation wise, there has been some, some degree of cooling off over there as well. But even on the corporate side, clearly there are asset quality problems which an ICICI Bank or an Axis Bank are facing. Especially ICICI Bank has seen in the last couple of quarters. But valuations are more than factoring it in our view, and in absolute terms, these banks are well able to absorb those pressures and keep their net NPAs, more or less in a reasonable band. So, in that sense, even the corporate focused private sector banks remain a buy for us.
Thanks very much, Vaibhav, for joining in, giving us a view on the overall banking sector. Keep an eye out on the index with the European markets extending their losses. We're again at 78.39 on the index with the Sensex off by 424 points. Ajay is here to give us a snapshot of the derivatives activity and bears in control, Ajay.